Let's check on the futures this Wednesday night. We'll start with the S&P futures, the ES. I'm starting with a 2-hour chart to show you the downside scenario. We are struggling to hold the bounce level from the 20th, and at risk is the candle from the 13th. That is the Powell candle. So what I'm thinking is we are in the sell the rally mode inside of a descending channel, and it would look something like this. So I'm looking for strength to be faded. Levels, this looks like an easy level to pick, and that would be 4760. And we have four 2-hour failing candles into 4770. Easy, nice round numbers. What's at stake? If we lose 4741, we will end up below 4720 at the base of this December 13 candle. So 4710 is totally doable, but in a series of zigzag inside of descending channel. If we zoom in, we can pick up a couple of other levels. I'll put legitimate lines. So we picked up a correct one at 476162. We have, I think, sellers hiding at 4757. So I'm going to put one here. And of course the low. So any strength into 4757, I would look to fade. So if we get a rally overnight, I would be looking for this action, and then we decide what happens at this level. If they lose it, the 4740 mark, then we get action for the second leg lower. Let me zoom in to 15 minutes to discover new levels or not. No, 4772 is another place where I can put a line. So there we go. Any strength into 4756, and then a second layer. Let's say we get a headline overnight or whatever, and we get a burst, and we can catch another short up here. I'm still in the sell the rip mode. That's what's going on, and I don't want to fight with that. That's the ES. The NASDAQ, the NQ, is a step ahead of the ES as far as losing support, and December 13th. That is the Powell candle completely priced out and then some. So just from that level, let's see if we can pick out from that perspective. This level looks good, which is 16,624. Let me see, extend it left and see what I picked. Good grief, look at what I picked. I did not plan this. Perfect level to have picked. Okay, so any strength into that zone, 16,624, I think will be sold or is an opportunity to fade at 16,660. And also I can copy this and paste it. I would imagine that 16,738, 740 would also be a problem. So in the mode of selling rallies, although this one may be closer to the bottom, but if you look left, we have gaping holes all the way down to 16,100. So I'm in a sell the rally mode in this one as far as trading behavior. We do have a descending channel and it's accelerating. Now, on the way up, I kept complaining about rising wedges. Well, here we have a descending wedge. What do I mean? We have a rapid descent coming into a pinch. Often they can pop. So that's when I want to sell those pops into levels that I deem significant. 16,625 to 16,650 is level 1. 16,725 to 250 is also level 2. So fade the rally. If we get a pop, I would try to short with stops to get some points downhill. And if they get here before I get started, if I'm more conservative, this is an easier one. And just don't be greedy on the way down. All right. Surprisingly, the RTY, the small caps, they're falling a lot, right? But they rallied more, so they haven't even started losing the December 13, the Powell candle, this big guy right there. So that's our reference point. Now, this green thing you see in front of me here is a 2-hour, and it also probably shows up on the 1 hour. It's a descending wedge. It's part of a harmonic, and it says maybe we can get a bounce, and it should be a hard bounce, and it can even get up to 2040 in a couple of sequences. One, fade, and if they're lucky, they do this and get to 2040. I don't know if I believe them, and it would be invalid if they lose 1972 or 73. So there's no room for error here. Okay, so let's zoom in and see if we can get more granularity and more levels to trade. All right, so I see a couple things I like. First of all, let's see if these help us. These are old levels. Let's move them forward. They mattered back then. I bet you they'll matter again. So I'm going to move them forward. Wow, So I like already 1994. Good year. Where was I? Oh boy, that was way back. 1994 plus or minus $2 is an area to fade. So I think this first leg, if they attempt it, they're going to find a lot of sellers. I don't know if I want to short 1984. I want to see how they behave. I want to give them a little dip and see maybe they can get back to 2000 and 2004 and see if they fade from there. And sadly, there's no level that is very significant here. Maybe 1968. Let's see what they do there. There should be a buyer, but not hard. So sell the rip mode, sell the rally mode, descending channel mode. So I'm looking for better lows. This is not a good low. Doesn't mean we can't bounce here, but it's not a good low for me. The Dow is a bit of a tricky one for me. It looks, if I zoom in, I'll show you in a minute, it looks a pretty solid low, but I think it's the most precarious. It's a Dow 30, so it's 30 stocks, but one big stock can really make a huge impact. The day we have no strength, then the real impact of the Dow will, like for example, we had 2 or 3 giant companies. By giant, I mean stocks that are $400, $500, $350 be up. They offset a lot of losses, so it's not representative of an index, right? So the day that there is unanimous weakness, like there isn't one giant company up 2% or 3%, that's when you see the real downside here. So it's at risk of real downside to come down to 37.1 to price out the December 13th. So let's zoom in and see if it's even tradable. Any strength into 37.860, I would fade. So if it gets to here, I think there are sellers at 37.800. And let's say they hiccup and come back to here. I think this whole section here is shortable and can be acted on. I mean, if you're good enough to stop out with your stops, you can start here. But I think it's easier to do this and see if you can get the retracement back to the base. That's the idea. I think there are a lot of sellers at 37.940, 37.980. They're scattered, but it seems like there is a level here. So that's why I picked that area. Let's see how that plays out. Very similar to the Dow is the shape of the gold. I'm not a gold bull here. It will need a miracle to come up and take out 2090 and 2100. I think there are a lot of sellers into 2060. In fact, they start at 2055, 57. Let's see what happens there. If I were to short something 2070, I would fade it. If we get to 2070, I would take a bearish position to see if it can curl down, I should say, and come back and retest this level of bounce. Because if you do that, then I can guarantee you this much of downside, eyeball, maybe this much extra that I'm not counting for. So a retest of, is this the, yeah, we go back to the Powell candle. Can we trace out the Powell candle? I think we will. So it's a series of fading. So let me see if I can get us better levels on a smaller time frame. Ooh, okay, I already see it. Here's this candle on the 3rd today. So 2057 is your level. And 60.1, it's 0.7, 57 and 60.7. Okay, and then you have this wick, a couple of them there. That's an easy mark. So plan your, I don't know if I want to hold a short straight up without a rally into some prior fails. That's probably ideal if you get it. I'm not trading gold. I was short gold today. I closed my last. It was a good win, so I'm walking away from it until I get better clues. So crude is the last one I'll do today. So it looked strong today, but that's because it needed. I don't know what would happen if crude loses 67. The downside is huge and it would not fit with the realm of logic. So that alone is a reason to get long the next time it falls into 69, because the alternative just doesn't make sense. Why would crude be in the 40s, right? So if it's illogical, then it's not likely going to happen. It's not impossible, it's just illogical. Okay, so this rally is easy to get here. It's another story to get out of the 73.16 mark. So I'm going to borrow this and bring it down here and say if they take out 73.70, they could get to 75. But I think it's a shortable event. So I think I would let them take it out, and if they do, I would short into that. So my entry point for a bear would be inside 74.50 or higher, and see if I can get 2 to 5 points maybe in a sequence of events. You can short against this if you're good with stops, and that opportunity would be probably to 71. So this is why it's either, I would rather play from here to wherever, not from here to wherever. It just doesn't seem like it has enough meat. Unless your thesis is that it's going to go here. And I don't think it will, because if it does, it starts something pretty nasty and crude, and I don't think it fits within the logic right now. All right, that's it. Hopefully you stay safe out there.